A very good morning, team, and welcome back to another Daily Market Outlook. My name is Fabio, and thank you for tuning in, where we're going to be analyzing the major dollar pairs and, of course, gold. Now, we're going to start off with euro-dollar, because euro-dollar is an absolute roller coaster these past few days. Now, what we had yesterday lined up was this area of demand here on the daily time frame. We can very clearly see that we had a sell before a buy up, which is our area of demand. So I was looking for a potential long inside of it. We can see that overall internal trend playing out beautifully in towards the upside. This here is your daily fractal low. And if we zoom out in towards the weekly, we've been looking to trade the weekly up higher, potentially back up at least in towards the EQ and in towards that 0.7 fib slash supply zone here on the weekly time frame. Okay, so after seeing that weekly change of character here, which broke this change of character low, ultimately what we've now seen is a shift in market structure, and we're now just looking for the next impulse in towards the upside, which might only come next week. Now, what I was personally looking for here on the daily now was this daily area of demand to then push the market up higher, but I needed lower time frame confirmation. So what I did is I went in towards the 4-hour time frame, and here on the 4-hour time frame, I was analyzing the fact that we indeed saw, let's say, this push up, pull down, push up, pull down, push up, pull down, push up. The overall swing here on your USD, and let me just clean up the chart for you guys, is this. So here we saw a break of structure in towards the upside. So therefore I consider this a downtrend over here. And now I consider this to be a swing high, this to be a swing low here on the 4-hour time frame, and we're now currently making a retracement. Okay, so based on what I see here on your USD, there is still potential to retrace at least in towards 0.5 fib here, based on that 4-hour swing structure, which is, this is the swing up and this is currently the correction. Now, I was happy to look for a potential long yesterday here, but what I'm going to show you is that first of all, we had that daily demand zone, right? So first, what I start with is looking at the daily time frame, and I see, okay, we have a daily demand zone. Then I drop down in towards the 4-hour time frame, and I start looking for our 4-hour demand zone. So what did I identify? Well, I identified over here that we pretty much had an imbalance candle, which was acting as an area of 4-hour demand. And what I then always want to do, and as you guys know, is I look to identify an area of 4-hour demand inside of the demand zone itself. So we get that overall push down, retracement, and now I was looking for the overall downside continuation. This here was the supply zone yesterday that was in control, and you can see we got some downside pressure, a lot of people entering new potential sell positions, but personally I was trying to look for even further upside after seeing what? Well, a break of that area of supply. Because again, if I clean up my chart here for you guys, what I was looking at was this. This was the current supply zone that I was in control. Then the supply zone flips into demand. So this was then the demand zone that I was in control. As we can see, we break up. So we get the push down, the break up. Then I was looking for the retracement to get that next push up from that area of 4-hour and daily demand. However, it is risky because we have not yet seen that 0.5 fib retracement, right? So what I'm then doing is I'm going into the lower time frame. I'm looking at the 1 hour, I'm looking at the 15-minute time frame. And what I then do, and it's going to be the most clear here on the 15, is that I look here at the 15-minute time frame, and what I identify as well is, again, push down, retracement, push down, retracement, push down, fills to continue. So then what I identify again is the 15-minute break of structure that we had over here. This becomes your swing low, this becomes your swing high, and then I was looking at this area of demand. However, you can see we come into that demand with a downtrend. So then again, what I'm looking for is just confirmation that this demand zone over here, so this imbalance candle, is actually ready to push the market up higher. So how do I understand that that demand zone is actually ready to push the market up higher? Again, if we identify a break of structure. So what I was simply looking for was this demand zone here. Okay, then I identify this initial tap as my liquidity low, because there's no liquidity in the overall push up. And then what I wanted to see was a break of that high. Then we would have created the sell before the buy as an area of demand, and then I would have gone long. But now I stayed out of longs due to the fact that there was no lower time confirmation, and we just saw the market push down lower, which was obviously the best decision that I could have made. Now we see that your dollar is just consolidating here. It's very, very clear. Overall, it's consolidating, so I'm personally not getting into any positions for now on EU until we hit that 0.5 fib retracement level, and then I'm going to be start looking for longs once again. Okay, also if we look at the daily time frame, there is still an open demand zone a little bit lower with a liquidity low right above it. This here is your liquidity low, and then this could be considered an area of daily demand. So I'll be keeping my eyes open for once we tap in towards there, and then I'll look for that daily change of character, and then I'll be happy to scale into those EURUSD longs once again. Now, going into the dollar index itself is still inside daily supply. We can see that it's stuck inside that daily supply zone. We have a few bullish candles this week. Obviously, yesterday Trump announced that he's going to be imposing tariffs on both Canada and Mexico, 25%. He has confirmed that it's going to start. That is why we're currently seeing the dollar push up higher. So we can currently see that this demand zone is in control here on the dollar index. I don't really need to, I think, clarify it any further, but you guys can see it. Yeah, this sub for the buy up, that is currently in control. So we're inside daily supply. So yes, we're looking for downside, but again, because of the news announcement of Trump imposing those tariffs, we saw a massive push up. And then again, now we have this as our area of demand. So if we want to see further downside from the dollar, we need to start breaking this doji candle's low over here, which is your 4-hour fractal low. And then for me, that will confirm that we have potential to push down lower. Now, if that does not happen, we could just continue with the current order flow up higher and then potentially start breaking this daily fractal high. Do remember that it is, again, a little bit risky to short the dollar in the sense that we have this liquidity low over here, we have this area of demand over here, and the overall structure is from this low in towards this high. We make that 0.5 fib retracement, we liquidate. So now what I'm actually kind of looking to see is, okay, are we going to head down lower and see that 4-hour change of character, or are we going to now break the daily fractal high over here and then see another push in towards the upside? Okay, so once we break that daily fractal high, then I would expect that there's potential for further upside on the dollar index. But if we break that 4-hour demand zone that we currently have here, then I'll be looking at potential for the downside for the dollar. Okay, so the dollar is a little bit in indecision at the moment. So waiting for one of either to happen to have a more clear perspective on where I expect the dollar to be heading next. I need a little bit more confirmation because we've been consolidating all week with all the major news announcements that we had. Obviously, Fed interest rates from both from the dollar, the interest rates on the dollar and the interest rates on the euro, which have caused a lot of, let's say, consolidation, and the market is waiting to break out. We saw a liquidation of the low. Who knows, we might get a liquidation of the high and then just keep on chopping, and eventually we'll choose a direction. But we need one of either things that I just explained in order to understand what that direction is going to be. Now, going into AUDUSD next, I personally opened a swing position. This is an initial swing position that I have on. I explained this yesterday in the daily market outlook, but also in the live session that we do every New York session on both Tuesday and Thursday. This is kind of a hedged position just to ensure that I am in those dollar shorts if they do play out. I have a very wide stop loss, as you can see, around 80 pips, with my stop loss underneath this protected low. So this for myself is a very strong low. Why is it a strong low? Well, because it liquidated the range low. Okay, guys, so when you have a low or a high liquidate a range, that is going to be a very strong low or high. So what we had over here was a very strong high. You can see the market was consolidating for, let's say, around a year whatsoever, maybe even longer, yeah, even longer than a year. And then what happened is that we liquidated the range high over here, and then we saw the entire reversal. So now we've had a very heavy overextended move in towards the downside, and now we liquidated the range low, and I'm now looking for that reversal back up higher after seeing also a weekly change of character. So weekly change of character, guys, is just a market structure shift here on the weekly. There's no top wick, I think, on the weekly time frame as well now. So looking now after a 0.7 fib retracement for this long position over here with my stop loss underneath the lows. So that's what I'm looking at from a weekly perspective. And then also looking at the daily time frame, we can also very clearly see that we made a nice retracement in towards the downside, and that the fractal structure is bullish from this low in towards this high, and that we broke structure in towards the upside here. So again, very, very clear structure where we get this push down where that broke market structure, and then we get the push up again, breaking market structure. So now we've just seen the retracement back down. We grabbed that internal liquidity low, and now I'm just looking for the next leg up. I have my stop loss on a very safe spot for if EURUSD does indeed push down lower, then we are still going to be in this swing position overall. So that's pretty much my daily bias. Obviously, again, we have like this previous area of demand. It's not fresh because we already tapped into it with this wick over here, but then I just enter on the internal liquidity. And then if I look at the 4-hour time frame, what we can see there is that I am a little bit in early, in the sense that the overall supply chain is still down here on the 4-hour, right? So we have supply, then again we have supply over here, and now again we have supply over here, which is being respected. So if you want a safe entry, then wait obviously for the 4-hour fractal structure to shift, and then, for example, get in. because that's going to be the safer option always when you enter, obviously, on the 4-hour order flow. But for myself, I just like to be in this swing position and not even have to think about it anymore. So that's currently what I'm personally just going to be doing. So yeah, that's what I'm waiting for. And then obviously once we break the 4-hour order flow, so break that high, then I'll be looking for scale in positions on AUDUSD. So that's what I'm looking at for Aussie dollar overall. I think that is clear, very simple, straightforward setup. Then we have pound dollar. So pound dollar itself pushed down lower, if I'm not mistaken, yesterday. Yes, indeed, after tapping into that 4-hour supply zone. So interesting. Obviously we have the range, right? So this is the range high, this is the range low. Then we have retraced in towards this supply zone. Now inside that supply zone, or this daily supply zone, we can look for short positions. Momentum is in towards the downside, and then we see a retracement into daily supply. So now daily fractal low or internal low is still over here. Do keep that in mind. So we get the push up, retracement, push up, retracement, push up. So this could just be a retracement into this demand zone and then, for example, head up higher. But for now, on the short term, I am looking for some downside on GU. Go into the 4-hour time frame, and then we can see very clearly that we made a nice retracement into where? In towards that supply zone, and that we grabbed lower time frame liquidity on the 1 hour. You can very clearly see it. We had this drawn out already all week long. You can see that we had those 3 equal highs over here, or these 2 equal highs, which tried to take out this high, failed to do so. We tap into that supply zone, then we get this kind of like fake push up again. And then what happens is that here we see the break of structure. Now this morning we have retraced back in towards this buy before the sell over here, and then from there we're selling off. So a nice potential position that you could have taken. Now looking here at the 4-hour time frame, looking for some short-term further downside, especially back down in towards that daily demand zone, which is going to be over here, right? So these 2 imbalance candles. And what is an imbalance candle? That's a 50% body candle, or this one imbalance candle, waiting for it to hit there. And then I'll be looking to see, okay, how do we react? Are we then going to see a reversal back up higher, or are we going to break the daily fractal structure, see a retracement, and then I'll be happy to get into a potential short position? Okay, so that's my bias on GU. And then last of all, we have NZDUSD. So NZDUSD itself is messy for myself. Not really looking too much at it at this moment in time. What we have is a bearish daily fractal. So again, internal structure is bearish. This is now your high, and this is now your low over here. Personally, I would only be looking for a potential long once we take out this liquidity low like we did on AU. We don't have fresh daily demand, so therefore you need to at least grab that liquidity low. If we want to see further upside, wait for this high to get broken, the black line, and then get in a potential long, because for now, again, we saw a bearish market structure shift. So NU is a little bit messy. All you need to understand is that this is a market structure low break, and that this is now your supply zone that is in control. So therefore not interested in looking for longs, only looking at short-term shorts. Also, especially because of the fact that if we zoom out here on NU and we look at the weekly time frame, you can still see that we have those open lows. Now obviously, yes, on the weekly time frame we did see a bullish fractal break, right? So here we had the low break, here we have the high break. So it does still make sense from a weekly perspective for NU to push up higher, but the daily time frame is just for myself not complying, and therefore I would preferably just only stay in AU for now, and limit my risk on those positions, just because of the daily here not being very clean on NU and there not being any fresh area of demand. Going into gold, last of all, gold hit a new all-time high. We can very clearly see that we got another push up. Well, that's great news. Been calling that for quite some time now. Now, obviously, what to do when you hit all-time high? Best to just personally, in my opinion, stay out until we hit the overall order flow again. So for now, what is the overall order flow? Well, obviously here we just look at the overall sell before the buy. This is now your demand zone, so do not go long over here anymore, because when you have had a break of structure like we've had over here, this is the break of structure, this is the break of structure, you don't want to be going long after the break of structure, because what do you expect after a break of structure? You expect a pullback. So you always want to go long on the impulse and not after the break of structure. So now just looking for a retracement, and then obviously we'll be looking at those demand zones for potential skill in positions once the order flow flips bullish again. But that's personally what I'm waiting for. So no positions now here on gold. Wait for the lower time frame demand zone to get hit, or the 4-hour demand zone to get hit, and then inside of there look for a potential long position. For now we're just consolidating, and let's wait for the next move to happen. If we do get a retracement down lower, we could look for potential longs. So that's it for today, guys. Thanks so much for tuning in. Wish you all a fantastic trading day and speak soon. Have a great weekend.